Hey guys, Zach Silverman here. Hope you're doing great. As you've likely heard, the Bank of Canada has just had their announcement today and they've decided to leave the prime rate in Canada unchanged. So it was about a 45% chance of a rate cut coming today, but with all of the uncertainty going on, they have decided to hold steady for now. So prime rate stays at 4.95%. What you can see on the screen here is something that we use with every customer now to build out their mortgage strategy, whether it's a purchase, a refinance, a renewal. This is something we're now offering on all files and something that I find is hugely valuable to take a lot of, you can see a lot of numbers here, a lot of information and distill it into something where our job is to give you as much information and advice on where the markets are at today so that you can make the best decision for you or your family. It's not up to me to say, go with a 2-year fixed, go with a variable, go with a 5-year. It's up to me to show you some of that guidance. Okay, and so what this is this is as of today, after the rate cuts, what's happened in the market. This isn't my thoughts, someone's opinion. This is what the markets and the bond markets are pricing in for what's going to happen moving forward. Now, something to keep in mind, all that we can do is we can take the information that we have today and make the best decisions that we can. Things are changing right now with what's going on economically and globally in the world. Things happen on the daily that shift the markets. This could look drastically different in a week or 2 weeks from today. So in no means is this going to be, hey, this is going to be accurate for the next 3 years. It just doesn't exist out there. So right now, the markets are pricing in that the next Bank of Canada announcement is in June and that there will be a 0.25% rate decrease. So that would bring prime to 4.7%. So right now, as you can see in this little area right now, this is what the markets are pricing in, that variable rates, discounts are going to get a little bit better moving forward. Right now, the best discounts for an insured purchase is prime minus 75. For an uninsured, like a refinance or 30-year amortization, things like that, you're probably looking more in the prime minus 0.6 range. But again, we can run this through for your specific files anytime. But based on where the market pricing is at right now, you can see that in 1 year, the markets are pricing and rates are going to stay quite steady. They will go up and down. Right now, there's some pressure in the bond markets for rates that have moved up a little bit last week. But overall, after that, rates just kind of bumping up a little bit over time. You can see, based on what's happening right now, that today, just on a numbers perspective, a variable rate mortgage is going to outperform the other different options. Closely behind is a 5-year fixed. Basically, you can see here in the term comparison, variable versus a 5-year. It's going to cost, over a 5-year period, it's going to cost you about $3,800 less than a 5-year fixed. But keep in mind that you're taking on risk for that savings. And even if I switched one next Bank of Canada announcement, if things changed and they didn't decrease their prime rate, you can see that just that 0.25% point puts the 5-year fixed as the least cost of borrowing over a 5-year term. So these are really important things to weigh for each person's situation. What is going to be best for you? How much risk do you want to take on? What's your strategy? And we'll talk about that together. But this is by the numbers, what's going on in the market. Hopefully this makes some sense and can be helpful. If you want to go through this together for your specific situation, no matter where you're at in your mortgage, would be happy to do so. Thanks so much. Chat with you soon.